Good morning, it's Kenny Burdine. I'm recording this on Monday, April 27th. It's about 10 a.m., so not very many cattle have sold in the state yet, but I want to take a few minutes and talk a little bit about what we saw in the markets last week and what I think might be laying ahead for us. A couple of things I guess I would say first of all. I'm going to focus first and talk about slaughter cattle prices. Did this last week too. 2 weeks ago, we traded cash cattle at 105. Last week, it was 102. I don't have this final number yet for the 5 market weighted average, but it looks like it's going to be probably something close to 97. So looks like there was some discussion, obviously, about, cash market versus futures. It looks like the cash fed cattle market is going to move down something closer to where the futures market has been. I want to just hit head on this issue of slaughter capacity and so forth. Blue line there is 2020, dotted line is 2019. You can obviously see the sharp drop that really started the second week of April and has continued through the last 3 weeks. We've been running more than 20% below where we were at the end of March and early April. And there's no way to sugarcoat that. That is an issue. All indications are we're backing some cattle up in the system. We're not harvesting as many. If you look at placement numbers, the March placement number came out last Friday, and that number was down 23% from a year ago. If you look at Kentucky marketings, even through our auction system, with really one exception, we've been down around 40% the last 6 or 7 weeks. So we're backing some cattle up, and that's not surprising given what prices have done. And I think also just the uncertainty. There's definitely been a hesitancy to sell into the uncertainty that we have right now in the marketplace. Also kind of want to focus on something else, though, that's not gotten a lot of attention. And I want you to kind of look quickly look at that blue line 2020 versus that dotted line 2019 for the first 3 months of the year, especially here in March. And I think this is important to understand. We really had harvested a lot of cattle, especially in the second part of that first 3 months of the year. So think about from like mid-February to the end of March. We were actually running about 4% above year ago for the first quarter. And I think one could make an argument that perhaps some of those packing plants thought they might have some labor issues and have to shut down or slow down at some point. So they were trying to get a little bit ahead. I don't talk about cold storage much, but I do think there's a story that can be told here that's interesting. I want you to notice, first of all, dotted line 2019 and that red line, which is the previous 5-year average. We tend to see cold storage, meaning, basically stocks of frozen beef, we tend to see it decrease from January through summer. But notice that blue line 2020, we've actually seen an increase from January to March. In fact, at the end of March of this year, we had 11% more beef in cold storage than the end of March last year. I think that also just makes the point that we were doing some things to try and get ahead of this. Am I concerned about slaughter capacity? Absolutely, it's a concern. But I also think it's worth pointing out that we had done some things in the industry to try and get us in position to handle it to some extent. Quickly, I'll walk through Kentucky feeder cattle prices for last week. 550-pound steer, I kind of use as my calf market baseline. He dropped a little bit last week. He's in the low 140s, but about where he was 2 weeks ago. One thing I would say in general is that the last 2 weeks have been relatively steady, which is a lot to say in a market as volatile as what we've had. The last 2 weeks have been less volatile here in the States. So he's about where he was 2 weeks ago. He's been kind of in that, 140 to 145 range state average. You look at what groups and the value-added type cattle are doing, they're in the 150s. So that's kind of where they've been. Heavy feeder cattle prices, they gained about $1 this past week, but they're about where they were 2 weeks ago too. So again, they've been fairly steady, and that's actually been one positive thing I could say about our markets here locally. Cull cow prices, I'm going to just kind of quickly point out, take a look at that market. What I'm pointing to here, that peak, that was the last week in March, and I think everybody's kind of been focused on that. Saw a massive drop in price that first week of April for these cull cows. I'll also point out that first week of April was the one exception that we've seen the last 6 or 7 weeks where we actually moved quite a few cattle through state auctions, and I think that may have been part of the issue there. The good news is that we saw a nice gain in these cull cow prices 2 weeks ago, and we were able to hold that last week. So that may be the most encouraging thing I can say is we've sustained those gains from 2 weeks ago this past week. In all honesty, although it's easy to kind of focus on the end of March and what we had, This is actually a pretty good cull cow market. What I'm showing you here is 80 to 85% boning cows. I'm showing you the average dress, and they've been, kind of in the mid to upper 50s. The high dresses, we've had some in the 60s and even the 70s. Now we've had some on the lower end as well, but overall, it's been a pretty good cull cow market. And the same basic thing holds for our slaughter bull markets as well. Last thing I'll talk about quickly, I'm getting a lot of questions about direct payments to cattle producers through the CARES Act. Specifically, it's the Coronavirus Food Assistance Program portion of that that has some direct payments in it for livestock producers. There's an estimated $5.1 billion there that will go to the beef sector, or could potentially go to the beef sector. The questions I've been getting, though, have been about enrollment and how much their payment's going to be. And understand, we simply don't know that yet. I'm trying my best to mostly focus and share things that come directly from USDA, but we don't yet know the application enrollment process. We don't yet know the actual payment levels, and we don't yet know what, if any, type of documentation might be required for payments. So I would just say this: understand, first of all, there's a lot we don't know. Secondly, certainly keep an eye out and listen for announcements and things that might give you some direction. And the last thing I would say is that I think that USDA will move fairly quickly on this. One thing Secretary Perdue said in his teleconference, I guess it's been now 2 Fridays ago, was that he wanted payments to start going out by the end of May, which is an aggressive timeline. And if that's the case, then I think they'll probably get details out and start signing up relatively soon. So having said that, it's probably a good idea to start gathering anything you might have in terms of documentation where you could show that you did own cattle or that you did sell cattle in 2020. That way, if you're asked for something like that and they announce the enrollment process, you can move pretty quickly on doing that. I think that would be probably prudent. By all means, reach out to me anytime. You can catch me by phone. I'll certainly call you back if I'm not in the office. By email, kburdine@uky.edu. And follow me on Twitter if you wish, Kenny Burdine @KY Cattle Econ. Wish you the very best. Thanks.